The world's most successful investors. Great money managers are the financial world's rock stars. Here are the greatest investors have all amassed fortunes as a result of their success, and in many cases, they have assisted millions of others in achieving similar results. These investors' trading strategies and philosophies differ greatly. Some developed new and innovative ways to analyze their investments, while others chose securities almost entirely on instinct. Where these investors agree is in their ability to consistently outperform the market. Hello top listers, please give us a like, hit that bell icon to never miss an upload, and don't forget to subscribe. William H. Gross. Bill Gross, known as the King of Bonds, is the world's leading bond fund manager. He and his team manage more than $1.92 trillion in fixed income assets as the founder and managing director of the PIMCO family of bond funds. Gross was the first portfolio manager to be inducted into the Fixed Income Analyst Society Incorporated Hall of Fame in 1996 for his contributions to bond and portfolio analysis. John Bogle. In 1975, Bogle founded the Vanguard Group Mutual Fund Company, which grew to become one of the world's largest and most respected fund sponsors. Bogle invented the no-load mutual fund and advocated for low-cost index investing on behalf of millions of investors. In 1976, he created and launched the first index fund, Vanguard 500. The investing philosophy of Jack Bogle advocates capturing market returns by investing in broad-based index mutual funds that are no-load, low-cost, low-turnover, and passively managed. John Templeton. One of the 20th century's top contrarians, John Templeton is said to have bought low during the Depression, sold high during the internet boom, and made a few good calls in between. Templeton established some of the largest and most successful international investment funds in the world. In 1992, he sold his Templeton funds to the Franklin Group. Money magazine dubbed him arguably the greatest global stock picker of the century in 1999. Templeton was knighted by Queen Elizabeth II for his many accomplishments as a naturalized British citizen living in the Bahamas. Thomas Rowe Price Jr. Thomas Rowe Price Jr. is known as the father of growth investing. He spent his formative years struggling with the Depression, and the lesson he learned was to embrace stocks rather than avoid them. Price considered financial markets to be cyclical. As an outlier, he began investing in good companies for the long term, which was virtually unprecedented at the time. His investment philosophy was that long-term investors should focus more on individual stock selection. His successful investing career was built on discipline, process, consistency, and fundamental research. John Neff. Neff joined Wellington Management Co. in 1964 and stayed for more than 30 years, managing 3 of the company's funds. His preferred investment strategy involved investing in popular industries via indirect routes, and he was regarded as a value investor because he focused on companies with low P/E ratios and high dividend yields. He managed the Windsor Fund for 31 years and earned a return of 13.7%, compared to 10.6% for the S&P 500. This is a gain of more than 53 times the initial investment in 1964. Peter Lynch. From 1977 to 1990, Peter Lynch managed the Fidelity Magellan Fund, which grew its assets from $18 million to $14 billion. More importantly, Lynch is said to have outperformed the S&P 500 index benchmark in 11 of the 13 years, with an annual average return of 29%. Peter Lynch was often described as a chameleon because he adapted to whatever investment style was working at the time. When it came to selecting specific stocks, however, Peter Lynch stayed with what he knew and/or could easily understand. George Soros. George Soros was a master at converting broad-brush economic trends into highly leveraged, winning bond and currency plays. Soros was a short-term speculator, placing large bets on the direction of financial markets. George Soros founded the hedge fund firm Soros Fund Management in 1973, which later evolved into the well-known and respected Quantum Fund. For nearly 2 decades, he ran this aggressive and successful hedge fund, raking in returns in excess of 30% per year and, on 2 occasions, exceeding 100%. Jesse Livermore. Jesse Livermore lacked a formal education and no prior experience in the stock market. He was a self-made man who learned from both his winners and losers. These successes and failures helped to solidify trading ideas that can still be found in the market today. Livermore began trading for himself in his early teens, and by the age of 16, he had reportedly made over $1,000, which was a lot of money back then. Over the next few years, he made money by betting against so-called bucket shops, which didn't handle legitimate trades and instead let customers bet against the house on stock price movements. Benjamin Graham. Ben Graham was an exceptional investment manager and financial educator. He wrote 2 investment classics of unparalleled importance, among other things. He is also widely regarded as the founder of 2 important investment disciplines, security analysis and value investing. The essence of Graham's value investing is that any investment should be worth significantly more than the amount paid for it by the investor. He believed in fundamental analysis and sought out companies with strong balance sheets, low debt, above-average profit margins, and plenty of cash flow. Warren Buffett. Warren Buffett, dubbed the Oracle of Omaha, is widely regarded as one of the most successful investors in history. Following Benjamin Graham's principles, he has amassed a multi-billion-dollar fortune primarily through the purchase of stocks and companies through Berkshire Hathaway. Those who put $10,000 into Berkshire Hathaway in 1965 are now worth more than $165 million. For decades, Buffett's investing style of discipline, patience, and value has consistently outperformed the market. In conclusion, forging your own path and producing long-term, market-beating returns is not easy, as any experienced investor knows. As a result, it's easy to see how these investors cemented their place in financial history. Thanks for spending some of your valuable time with us today, top listers. If you liked this one, please give us a like, hit that bell icon to never miss an upload, and don't forget to subscribe. See you later.